Hello, good evening.
Hello.
J.K. Rowling, very good.
I knew you'd appreciate that one for sentimental reasons.
Well, the fact I know who it is probably a miracle anyway. But no, I know it is. My kids are into Harry Potter.
Oh, I know, because David would call them the Potters.
Yeah,
And her name is Joanna, after all, isn't it? Joanna something Rowling.
I don't know. I
Yeah,
really don't know.
I didn't know.
Possibly.
I think so.
Yeah, I'll have to look it up. We'll just wait a few minutes, Emma.
Oh, she's Joanne. I'm Joanna.
Oh, okay. See, I didn't know that. I thought her first name was Jay.
J period.
Yeah. I had a bit of a mix up on times because it always was going to be Power Hour, and I realised the Zoom said 9 o'clock. So I think it's probably because I copied it from the mental toughness invite. So hopefully there's a few people who registered, but if not, we'll start it. And if anyone,
Anybody know how to like ping Glenn? I know he wanted to be here.
yeah, I put a message. I did it
Okay,
in the Discord.
gotcha.
Adam RSVP'd as well.
He did. He knew this morning. I just
Okay.
yeah. He told me 3 o'clock because I came up with my own time.
Oh, that's all.
Yeah.
Well, maybe 'cause in Zoom it did say well, mine says 9 p.m. It did say 4 p.m. on Zoom.
Oh, okay. So that's where I got it from. I
Yeah,
did think that. Okay.
and I did realize I think I might have said it when I was doing because when I said it, I had to like set the time zone and everything, and I may have just put
Yeah.
Central or whatever it was instead of Eastern or whatever time. I don't know what I did, but it wasn't right.
Yeah. I missed a Zoom baby shower once because of that. The mom who set it up was in California, and
Oh, right.
I did think it was like a weird time, but yeah, that was
Yeah, like 4 a.m. or something. Yeah.
it wasn't like that. I would have questioned it, but it was like extremely early,
Yeah.
or it was an odd. I can't remember what but that was the problem.
Yeah, who's that banging
Is
on
Ron
the door
gonna
at
join?
midnight?
Oh,
I
sorry.
don't know. I've not heard from Ron for a day or so.
Mm.
He said he was coming along, but he wasn't trading today.
Mm.
Um, I'll message him as well just in case. I'll just send a message and because he may not realise that I've changed the time.
Oh, yeah.
But I did tell him it was a power hour though.
Okay.
I'll just message him now. It won't because it won't like it because I'm sending to a US number. Okay.
Thank you for orchestrating this. I'm so glad you've put it into um, an actual thing, like we're actually doing it. So that's great.
Yeah, it's a good idea. Yeah, and I know you mentioned it a while back, and I saw someone else. Was it Team Bullwood doing it? Did a book club going back about a year ago. I thought that's not a bad idea. I think that's good. Right, I just messaged Ron. I couldn't, for some reason, my phone wouldn't let me send a text message. I think it's I'm trying to send from the UK to the US or something.
Hmm.
Okay. Has everybody read the book?
I haven't read the whole thing, but I'm through chapter 4.
Oh, okay. Let me just find. I'm going to share my screen. So I've got the ebook in front of me. So let me know if you can see my screen.
Yeah.
Here you should see a picture of a book, or you should see an ebook.
Oh, I do.
Okay.
Mm-hmm.
So don't worry. I'm not going to read it out to you.
Mhm.
You do not want to listen to me read a book. I can barely read myself. So
Can't be true.
okay. So what I wanted to do, can you see the book or can you see my screen?
I see.
Just the book
The
on
screen.
screen.
It's a perfect size too, and you're off to the right on a corner.
Oh, okay. Okay, so I was going to put my charts on the background as well. That's fine. I thought if we did chapter 4, it's like a very basic start to volume analysis, and me personally, since I've read this book, it's literally turned my trading around, and it's made me more aware of watching volume. I wasn't even until about for the last 2 years, I was taking trades, and I might as well not bother having volume on my chart because I never even I didn't even glance upon it or even looked at it at all. I just took it based on patterns. But as soon as I started reading this book, and now volumes, it's the first item I look at. Instead of looking at the chart, I go to volume first, chart next. And since I've changed my my strategy to use volume instead of chart patterns, I think my last 10 days have been all green bar one, and my last 2 months have been largely green. There's a few red days in there, but it's changed my trading, put it that way. And I thought this book is quite a good book to start off with because it's pretty straightforward. It's really easy to read, straightforward, and also she's British like me as well, so it's got to be good. Yeah.
Most definitely.
Yeah. And so I just highlighted some bits on the book which we can discuss really, and then I want to try and apply what we see in this chapter into the charts today. Does that make sense?
Yes.
Okay. So, and obviously anyone's had any feedback or they got any examples of charts or whatever as well, and when we get to some of the candle patterns, some of the volume bars, then let me know because we can have to show that. So I know I've highlighted each principle. So she's come up with I think it's 6 principles. And the first principle saying that volume price analysis is an art, not a science, which is probably why I found it hard making my own indicators to try and tell me when there's an anomaly, or in fact, or I wouldn't say anomaly. I've got an indicator which I've stolen and adapted to show me anomalies and stuff, but it's not great. But it's looking at the volume. It's actually looking at the comparing the previous bar or the previous series of bars with the current bar, and that is more of an art. And over the last few months, I've got more and more used to looking at the volume bars and then ignoring the parts of the volume which we don't need and just going with the more relevant. And she's quite right; it is more of an art than a science, and you can't automate it easily, which I've tried. So that's the first principle. Something good to remember. So there's no fixed rules in place. For example, if you see, let me just unshare. I'm going to go back to share screen. me 2 seconds. Screen 1. Hopefully my screen looks a bit different, does it? Do you see the charts in the background?
Yes.
Okay. For example, where she says it's an art, not a science, what she's referring to is like if you tried creating an algorithm to predict whether the volume is trending downwards or upwards, then the algorithm will get confused on all these dips. You know, that's an uptrend there, that's an uptrend there. But if you look at it by eye, you can see it's trending down. And that's what makes it an art, because you know, as a human being, you can identify that as a downtrend, and a computer, unless you're a clever programmer, which I'm not, a program will probably say it's a little bit down and a bit sideways, then a bit up, then a bit down. And trying to create an algorithm to do volume price analysis is quite difficult. So that's basically our principle. That's what she's saying. And then principle number 2 is patience, which I don't know about you, I don't normally have much of. And she's given a good example. The financial market is like a super tanker. It does not just stop and turn on a dime or a sixpence. The market always has momentum and will always continue beyond the candle or the candle pattern, which is signaling a potential reversal or an anomaly. So what she's saying is, rather than waiting for, here's a good example. In fact, probably this is a good example. We're waiting for ending volume, which you could say this is ending volume, this bar here. And as you're watching it come up, so the ending volume bar is that bar there, which is not near the top yet. So this is the super tanker getting ready to turn around. Hasn't quite turned around here, and it's still turning. And we've got another volume spike there, which is that little what do you call it, bottom tail candle. And then eventually the super tanker turns around and reverses. So it's not instant. And another analogy she uses that it's like a summer shower of rain, where the sun is shining, then there is a change, the clouds blow in, and in a few minutes the rain begins to fall lightly at first, then heavier, before slowing down again and then coming to a stop. I'll go to the next page. After a few minutes, sun comes out and it starts drying up the rain and repeats. So it's the same type of principle if you think of it like a summer shower. So, and before I started using volume analysis, and even now, I'm not always that patient. So I'll be trying to get in on a top here and a top here and a top there, eventually stopping out here, giving up. And then what happens next? The top, which you should have waited for, finally breaks, and then you see this nice run down. So patience, that's principle number 2. I've highlighted something else. It says the moral here is not to act immediately as soon as a signal appears. Any signal that is merely a warning sign of an impending change, and we do have to be patient. So hopefully that makes sense. So that's the second principle, patience, which I think we're all getting better at now, aren't we?
I think so.
Number 3 is all relative. Probably not as relevant, but when she says it's all relative, that means if I'm comparing my chart and my volume bars, and then you're comparing your chart and your volume bar, you may see slightly different chart, slightly different color for some candles, or and the volume may be different. But she's saying that it's relative to what's on her chart. So she wants, as long as her chart is consistent, it doesn't matter about what you see on other charts and what other people are saying. So you need to use the volume, what you see on your own chart and your own data stream, rather than watching someone else's data stream. And she goes on quite a bit about how she spent a long time, months and months, wondering why her data stream was different to everyone else's, but then realized it doesn't matter as long as you just trade according to your own data stream. So nothing too much to really discuss there. And then a fourth principle is practice makes perfect, which we all know. and it takes time to become proficient in any skill. But one skill, once you've learnt your skill, it's never forgotten, and this is a life skill, something you can use for the rest of your life. And then principle number 5, technical analysis. This is I find this bit the more interesting part because it's a technical analysis, but it's probably the least, what's the word? It's probably the only part of this which we need to spend the least amount of attention to, because everyone's good at technical analysis. It's how we handle all the trades. So basically she's saying that VPA, or volume price analysis, is only part of the story. Obviously, we're looking at the trend, we're looking at where the market's going, what other analysis we could, like breakouts, and she particularly talks about how the trends are equally important, and any price patterns we see. And then on a 6th principle, I think that's the final one, did I say? Yeah, the 6th one is the validation and anomaly, which is really what I wanted to talk about. Because this is obviously something interesting. It gives us pictures and examples. So can you see the book on my screen? Okay.
I can.
Everyone, is that okay?
Yes.
Okay. So I don't
Thank
have
you.
anyone. I can't see anybody on my. I haven't got a grid of people, so I can't see. I haven't got. I don't know how to open the chat or anything like that. Oh, here we go. Here we go. Yeah. So any issues, put it in the chat, and I can see as well. So she basically gives 2 ways of validating a candle and a volume. You've got one called validation, and another is an anomaly. So this is an example of a. I zoom in. No. And this is an example of a validated candle. So you've got a wide range candle, and you've got a large or above average volume candle. So, and the candle, black. So the candle size is relative to the size of the volume candle. And then go on to the next page. Here we go. And then here's an example of a narrow range candle, where the size of that candle is relative to the size of the volume candle. And obviously, when you start looking at this and you look at your charts, you realize it's pretty much accurate what she's saying, that you're looking at candles and volume which are relative to each other. So these would validate the price action and the move. And this is an example of an anomaly. So you've got a widespread candle, so a big candle, but you've got a really small volume bar. And so that will give you, that means there's below average volume, and whether you're buying or whether this candle's a buying candle or a selling candle, just means that there's not the volume there to push it any further in whatever direction it's moving. So that's an anomaly, and there's a few on the chart we'll look at in a second. And then we've got the next, which is, you've probably gathered this already. So this is a small narrow range bar, and we've got a high volume. And again, that means usually you see these at a top or bottom of a trend. It's a trend change where you've got the sellers and the buyers fighting in that small price range. And that's it really. So I thought maybe before we move on, maybe we'll just have a look at the chart and see if we can find any examples. And if anybody can see any examples, any charts you may have in front of you, let me know. So on my screen at the moment is the 5-minute MES. And I've not looked properly, but I know I did see something earlier. Where are we looking? If anybody else has seen an anomaly, tell me. So you can see here. So let's go. So what I'm doing, I'm just looking at the volume candles and just trying to find, maybe the 2-minute will give us a better.
Sorry, Paul, my space is limited here. I'm trying to see.
Oh no, okay. That's what I'll zoom in. That's fine. I'm trying to find an anomaly. I don't generally look at the first half an hour of volume because it's generally high volume anyway. If you see ones, here we go. So so this is a validated move because we've got below average volume. So we've got below average volume here. And we've got a narrow range bar here. So that's a validated move. So technically, we probably we could have probably expected that to continue down. And then this you could say is a validated move because it's a large range volume and a large range bar. And then what I generally find myself doing now is I just look at the current candle and I'm always comparing it to the last few candles to see whether the size of that candle is relative to the previous candles. So for example, this low volume candle generally means there's no volume behind the sellers anyway, so possibly it's just a pullback. Just trying to find a good example of an anomaly, you know, because I'm looking at a live chart, I probably won't find one, which would be typical. Here we go, this one here, and that's a perfect one actually. So you see this candle here, the green candle. It's relatively low volume. If you compare that to the, look at this, it's perfect. So this candle here, this bottom tail candle, has slightly above average volume, and then the next candle's bigger, but it's got less volume, so already alarm bells are ringing. And then the next candle is even bigger, and it's even less volume, so a decline in volume. And that will, to me, indicates that there's the buyers are not interested in pushing it up any further. There's just no strength in the buyers. And then we get this small candle next with a small bar that validates it. So that validates that small bar because it's a smaller candle. So the anomaly are these three candles here. And then obviously look what happens, then it sells off. So this is the type of pattern we're looking for. So like a pullback. So here is a small pull. So we're technically in a downtrend. So lower low, lower high, a lower low, and then we're putting in a lower high, but the lower high is doing what it should do if on a pullback. It's decreasing in volume, and each candle's not relative to the size, and then we see a big sell-off. Let's see if I can find another good example. So here's another example of an anomaly. And you've got this wide range candle and this wide range bar, which is fine. And generally you think that will be an end of a continuation of the trend down. And then you have this small volume bar here on technically it's a smaller, on a narrow, I would say a narrow range. Let me go back, sorry. It's above average volume because it's over the average price, but it's a narrow range candle. So that is almost an anomaly, but it's not quite. I'm trying to find one where it's really high or really low volume. I don't think I saw one today, to be honest. But they are there, and they do, and some of my trades over the last few days have been based on watching the volume. So we've got a nice one here, increasing volume on, and then we've got, so yeah, possibly an anomaly because we've got a large range, wide range bar and a narrow range bar, but that's still reduced volume, so it's probably validated. And then we've got loads of low volume bars. Had I done my homework, I would have had examples ready to go. But I was just expecting about to open up a chart and see what we're looking for. Wide range. See, that's a validated candle as well because it's small candle, small volume. Anyway, I think you get the idea, get the general gist of the things. Narrow range. Here we go. It is an anomaly. So you got this below average small bar here for this narrow range bar, and then this bar is twice the size, but it's lower volume. So that's an anomaly. And then look, then that started the uptrend as well. In fact, there is a chapter in the book what describes this area of congestion, where you're looking for the bottom of congestion and the top of congestion, and then you're watching for the volume increase on the breakout. And I think it's chapter 12 or 11. And then as it breaks out, this is your area you can then play off. And I'm sure if we played off it, what would happen? Oh, look at that. Then yeah, so that would have been a perfect example. So, and it pushes up. So yeah, so watching for anomalies. So had I been watching the market at midday today, I probably wouldn't have seen it. It's quite a small anomaly. It's not an obvious one because most anomalies are at the end or start of trends, but this is at the start of this trend. So technically, this is what we're watching for.
Well, you said, and I think that's what I need to figure out is the anomaly is usually starting or ending a trend.
Usually, yeah, because anomaly
Okay.
indicates that something's not quite right with that with what the price action's doing. So that's why you normally see
Okay.
it at the start of a trend or at an end of a trend. So let's see if we can see one here. Look at that nice volume spike there. Okay, so not really an anomaly, but then if you look at the candle, it's a little bit bigger than the previous candle, but the volume is 3 to 4 times as much. This volume candle here.
Okay.
So it's not really what I'm looking for. And hopefully there's one near coming up to this change of trend. So we've got these. No, it might explain why the day is a bit tougher than usual as well, because the patterns are not the same as normal as well.
Mm-hmm.
A nice little look at that for a little GBI. But they are definitely there anyway. And like I said, it's only using looking for anomalies is only one part of your toolbox.
Mm-hmm.
And it's just there to give you like an indication something's not quite right. So higher volume, potential change of trend, not validated day. Possible is an anomaly as well. So you got two similar sized candles, that one and this one, but the first candle was below average volume, and this candle was above average volume. Zoom out a bit. But anyway, so that's an example of what we could be looking for anomaly wise. You know, there's going to be one here. We're now not looking. No, that's fine. Okay, so let's move on just to the next part. We kind of looked at some. We just talked about it a second ago. Multiple candles. So we've talked about looking for rising and lowering volume. So this picture kind of sums it up quite nicely. So on here, this example, you've got a narrow range bar on a small volume bar, and you can see the bars are increasing and also the volume bars are increasing. So that's a bigger volume bar, and that's a bigger price bar, a bigger volume bar, and a bigger price bar. And that we've seen that a few times, haven't we, this week? And that's what we're looking for: rising price and increasing. And because it's rising, so the price action's rising, the volume's rising. That's showing strength in the move. And so that's validating the move. So if we ever see that in the market, which I'm sure we'll find now. Here we go. So this is the opposite direction. So look at this. We've got this price pulling down, and look at the price, the volume's going up. So we're getting an increase in volume while the price is going in either that direction or you know, you could equally do it in the long list of looking in the other direction. Oh, look at that, perfect. Hopefully you can spot what I'm looking at already. So we've got these volume bars increasing here, and at the same time we've got this price increasing, and that is validating this move. So if you're ever in a long trade, say you got in here and you're trying to find an exit somewhere, and you come up to one of your levels like here, come down, touched it, and it's going sideways for a bit, and then suddenly you start seeing the price pushing up a bit and increasing volume, then there's no need to get out of this trade yet. So you've got this next level coming into play, and then the volume is then sideways below average, and it hasn't really done much. So that's your warning sign to get out. Definitely not at this point, not there. You want to stay in your trade at that point. And that's what I've been using on all my runners this week, for the last month, looking at increasing volume and determine whether I want to get out of it or not. So it is the one in the opposite direction again. It's a good example as well. So we've got increasing volume here, and we've got decrease in price here. So the price is control. So we've got a small bar to start it off, a larger bar. I know it's not always the same. And then this larger bar, and we'd like to see another larger bar here to validate this volume. But the point is that entire let's just clear that entire area here is a good indication. If you're short, stay in, or if you're long, that's for you to get out. If you see that, then that's time to get out. But notice how we didn't see it here on this move. So that shows weakness because it's not increasing volume. And we know it's weakness now because we saw that it pulled back again afterwards. So that's how you can validate whether the move is valid or not, looking for strength and weakness. And I can't remember what's next in the book. I'm sure it says. So that's multiple bars, volume indicate price, rising prices, and increasing spreads on candles. Here we go. We just did this one as well, so I won't go through that again. So we've got decline in price spread, but we've got rise in volume. That's showing strength in the selling. And then we've got an anomaly. So we just pointed out the anomaly, which is increasing in price, but decrease in volume. And if we go into chart again, try and find a good example here. That's a great example. So we've got these candles coming down, but look, the volume is also coming down. So if I go back to the right page, that's probably the next one. So that's that one there. Can you
Paul,
see?
I have a quick question.
Yeah, sure.
What do we do with these anomalies? How do we interpret it? What do we do with that?
So for this particular example, you've got decrease in volume, but you've got and decrease in price. To me, if you're looking to find an entry in an uptrend, this is your entry area because there's no strength on that selling. So where the volume's decreasing, the sellers are not committed. Therefore, you can expect. So if I just move that. So on this particular example, if you were to go long on the break of that candle, well, you might have got stopped out there, or if you put your stop at a more meaningful place there. If you went long on this decrease in volume and then took the next, you would have made a nice move up. What would that be? If that's 1R, 2R, 1R meant 2R, maybe 3R, you could have made on that move if you used the wide area. You may have got stopped out. And if it was me, if I got stopped out, I probably would have got back in and put my stop loss back there. And then that would have been a 1, 2, 3, 4, 5, 6 R move, roughly, as you know, just an estimate. So let's look for another example of, so that's increase in volume because the price bars are going up in volume and the price is coming down. So that looks like the strength in the selling. We've got increase in volume there.
Because we're obviously using volume for confirmation, but when it doesn't really match, I guess there's always something to interpret, no matter what's going on.
Well, this is only one tool in your toolbox of technical
True.
analysis. So then you want to look to see whether you're coming into a resistance or support area, or if you've broken through an area, or if you're validating an existing trend. So, for example, this one here, we've got this pullback here, but we've got decrease in volume there. So while that's pulling back, the volume's decreasing. And if I was short, say I got in short, say I took this level here, that lovely GBI there, and I was trying to find an out. Here we go, we can do it here as well. So do you remember principle 1, or was it principle? I'll go back. It's an art, not a science. Principle here, number 1. So where are we here? So technically, you could say that's decline in volume there. But it depends how you know, a computer couldn't say that that's declining, it's stepped down a bit, that volume. So when I'm drawing, can you see what I'm drawing on the chart? Okay.
Yes.
Yeah, okay. And so we had this decrease of volume here. Although it was a good sell-off, not really a very good example, but let's find one. I saw one a second ago. Okay, maybe here actually. So here's another good example. So you've got below average volume and you've got decreasing volume there. Look, it goes up a bit, it's still decreasing, but you can see it decreasing over time as well from the start. And so, but all of this is that area I've just drawn. And being that it's an art, let's use a line instead. So you know, you could say that's decreasing volume there. And then by looking at it, whereas a computer can't say that. Whereas if you look in here, you've had a strong move up and then it's just going sideways for a bit. And you could say volume's decreasing, the price is decreasing as well. Therefore, you may expect it to push down further. You don't, because you get this last big buy-in, but then it does. So it's just to draw your attention to those areas. And knowing that you are potentially coming into an area of weakness. So we've got this area here. Oh, hang on. Do the line. So you've got that area there. We possibly could use that as a bottom area as well. And in fact, she talks about this, finding a top and bottom of an area of congestion. And then you can work out whether it's going to break up through that congestion or break down. Look at that. Oh, do you know what? I didn't even look at this bit at the end. But that is an almost perfect break and retest. And I only based it on that pivot at the front. So then you can,
that makes sense.
Yeah, so then you can use your volume analysis to determine when you're coming, because if you look, we've had really low volume all the way through until we get to about here. You start seeing a slight increase in volume. And that's at the same time we start seeing this sell-off and then that GBI. So you could use the GBI as one of your tools in your toolbox. And you validated it also by this decline in volume, so it's showing weakness by the buyers. And if you still
where it is under the moving average too.
And yeah, exactly. And it's at a level, and it's under the movement, and all the moving averages come together. I mean, I have GBI, not RBI, whatever I said a minute ago. So that would validate that GBI move perfectly.
And it was almost a double top, but not quite.
Yeah, well, I would call that a double top still.
Yeah.
So ignoring those two. So yeah, double top is at this volume of high concentrated volume as well, which is that red line is the point of control. So that tells you where the highest concentration of volume is. and you can see that it was just hovering around this area, all the volumes just in that area there. And so by using this, I know you had this big spike there, and that's why it's an art, not a science, because really you can rule that one out because that doesn't really signify anything. It must be some news maybe that came out. I don't know what came out. Was that 1 o'clock? Was there news at 1 today?
I don't remember.
No, 12. But yeah, so so that's how you can use anomalies in multiple candle patterns as well.
I think that's a spinning top candle, which is significant to some really successful traders that I know.
Oh, okay, I never heard that before.
I have to look it up. I'm going to mute myself and
That's okay. Yeah.
I'll get back to you on that.
So yeah, so yeah, so that's it really. That's basically that's the end of chapter 4. And then I don't know whether you want to call it quits on chapter 4 and we'll look at another chapter another day. I'll just stop sharing for a second. Get rid of my. How did that make sense? What we was talking about? I've basically taken the examples out of the book and trying to find a real life chart example.
Definitely, it definitely helps. Yeah, I wish that you could make the volume portion bigger because I feel like I'm squinting at
Oh,
the
you should have
volume.
said.
Oh no, I'm wondering if it's something we can tweak in our own charts.
Oh, so yeah, you definitely can. Hang on, let me share my screen again. Because I do that quite a lot when I'm looking at volume. Share screen.
Spinning top candles, if seen at the bottom of a downtrend, could mean a bullish reversal may happen. I know one trader, real life trading, Jeremy, he says he makes a lot of money off spinning tops.
So what does he say? What does it indicate?
I forget, there's like a video on his candles, but it can, if it's seen at the bottom of a downtrend, it can mean a bullish reversal may happen. Conversely, if it occurs at the top of an uptrend, it could signal a bearish reversal.
Okay. And that's different to a that little doji candle then.
Yeah, there is a distinction.
Okay.
Dojis have like a really short wick, almost no body. Spinning tops have longer wicks that extend.
Yeah. Okay. Because I just saw that candle as indecision, where there was extra volume and there was a battle going on between the buyers and sellers.
It's an interesting, I mean, I was just impressed by how Jeremy says he makes a lot of money just based on spinning tops alone. So it's definitely worth a video to check out on spinning tops.
Yeah, I will do.
Yeah. And it did occur, what the one we were talking about did seem to trigger a more bearish reversal. Like he said, if it's at the, I think but something to look into.
Okay, so something of interest. Because it's not on that chart, so I loaded it, reload it. But I have this volume indicator which I use. I built this one myself. Well, I stole it from lots of different places and made it how I want it to work. And can you see the difference in candles? You've got the green,
yeah,
you got the red half, and you got the neutral half. So that's that doji, that's that spinning top we just saw on that 1 minute chart around here. And so to me, what I do, I look at these candles because I started looking at volume more, so I wanted a better volume indicator. And so I can see now that we had slightly more buyers, sellers and buyers. It's pretty 50-50, but we're showing a red candle. So to me, that would be a little bit big negative, that would be. But obviously, I wouldn't contemplate because it added all this neutral selling, all this neutral, price action as well. So that was more of a indecision that would come out as. But what I do find useful is looking at candles, these candlesticks, and trying to find an area where, and I'm normally watching it if I'm looking for an entry, like here, for example, we've got very few sellers and more buyers. And what's the candles that one for? And that's for that one there. So yeah, indecision as well. So that's kind of how So that's how I use this indicator. And if anybody wants it, let me know. I'll share it.
What's going on under the candlesticks, the waves?
That is called a squeeze indicator, which I don't use as much now, but it's still very good. What it does is you're looking for the green. Can you see the green dots? They're very small.
Oh, barely. Yeah, barely.
And if you see orange, that's very rare, and you want to pay attention to orange dots. And that indicates the start of a squeeze. And as you can see here, orange dots, the squeeze is starting, and then suddenly we had this big sell-off, and it indicates by this. And then when you start seeing black dots, that's when you can start, or black dots, I think is when you can start thinking about getting out of it. So if I were to get out of it here, it should have been out by then. I think that's how it works. It might be when you start seeing the green dots, that's time when it's coming near to the end as well. So these green dots here indicating the end of the squeeze. So then you just manage to trade. So basically it tells you when the start and end of squeezes starts. And from memory, it uses, ignore I may not have the right terminology, the Kepler, is it called Kepler bands or something? Someone here might know what that is.
Bollinger Bands?
Not Bollinger. Hang on. Something channel. Bollinger Band. Yes, it. Yeah, it uses Bollinger Band. It also uses a Keltner channel. That's what I was trying to think of. And it basically combines both of those together into that histogram. And then you can see them. In fact, if you go onto your Thinkorswim, you've got it on there. That's where I found it. But you can't get it on TradingView. I had to find the code, and I think this was the one I stole the code for again, like I do with a lot of things. It's all open source codes. I haven't really stolen it, and I adapted it to work for my needs. But it's called a TTM squeeze, I think it's called. But you've definitely got it on your platform. That's where I found out. TTM Squeeze Pro. That's what you're looking for.
Okay.
And it's really good, really, really good. Like I said, I don't pay too much attention to it now. I used to, but I have it there because when I'm trying to identify a channel or a congestion area or consolidation, I often just have a look, see whether I can see whether we're coming to an end of a squeeze and then starting a new one, which we can see quite clearly there it has.
Yeah.
More of a guide. Again, some people only trade the TTM, whatever it's called, indicator, and they sell or buy on the orange, which is very rare. You don't really see the orange that much, and then they get out, I think, on the green or red or black. I can't quite remember, but there's loads of information about it on the internet. But I just use it as a guide.
It's a little complicated because if you look straight up, you can just draw a box and see that you're in a consolidation box anyway.
Yeah,
it's going sideways basically, and then it's going to break under.
Yeah, what you can't see though is the Bollinger Bands are squeezing down, getting tight.
Okay.
And when it tightens up, it's like a spring. It's being wound and wound and wound and wound. That's the Bollinger Bands. They get tighter and tighter like that. And then suddenly, bang, that's when it goes off. So I think that's what it shows you. But I don't use it now because I use volume. I think volume, trying to work out whether you're coming out of that area under volume, which you can see here, increasing. See this increasing? Here we go. This is a good example as well. So trying to find whether we're going to break out of this box. And you normally get a period of low volume, this volume here, and then you start seeing increasing volume coming in. Well, it's just mopping up the last few orders. And then you see the rejection. And in fact, if we go into one of the next chapters, accumulation, distribution, it talks about it here. So, and that's probably what I want to talk about on the next one anyway. And that is a perfect, look at that example there. It's almost exactly what you're looking at in the book. How good is that?
Perfect.
Yeah. So honestly, this lady, Anna Coulling, knows what she's talking about. And this book, everything I see in the book now, I can see it on charts. And now I can see it, I understand it better. I actually understand how, we're not talking about retail traders, we're talking about the smart money or the inside money. But I'm now seeing what the inside of the smart money's doing. And when they're looking to get out of trades, when they're looking to push it down, like a lot of people will be looking to go long here, think it's going to break out. But look what happened. That's because the smart money is relying on those last few retail traders to get in and to mop up the rest of their orders, which they accumulated from down here. So this is called the accumulation zone. And so the idea is that the smart money as such is accumulating every time. If you look at the volume spikes, hang on, let's go back to the previous one, and it'll be identical as well. So look at the volume spikes. So as we're coming down to this area, we spike up, and then we come up, then we come back down, we spike up, and then we come out with a bit of a, maybe we'll try pushing out on spike, come back down. Look at this, we come back down to this area, we spike up. And this is exactly what this is in this chapter here. So they start the camp, think of it as a supermarket stocking up their shelves. They're buying all the products as cheap as possible. So every time a buyer sells, you get a big increase in prices coming up to here. Is that a good color? Use red. Hang on. So you can actually see it. So every time they're stocking their shelves, you see an increase in volume because they're stocking the shelves at the lowest possible prices. So here, lowest possible price, they're stocking the shelves with product. Lowest possible price, stocking the shelf. Lowest possible price, stocking the shelf. And then you get the people fear of missing out. So, I want in on this action. I'm going to buy here. I'm going to sell, short sell here. And so people are coming in, they're selling it, and then boom, it goes in that direction. And then so that's how they can like get at, remember David used to talk about wholesale prices. So that's wholesale price there. Wholesale price, retail price. And that's the difference. Whereas so now the market makers are smart money, they know this is all smart money moving this up. They know exactly what they're doing, accumulating a bit more there, trying to get people who fear of missing out. So they grab a bit more here. Possible people trying to short like I tried to earlier, and it got me a beaut. And then they push it up further into this, then a distribution zone. So they're coming in. I know it's really like I've graffitied my screen, haven't I? And so we're going back to the next section, going back to where we were looking at a minute ago, that one there. So now in this distribution zone, which is this zone here, look at the volume spike. So we're coming up, high volume into the top, high volume into the top, another high volume, and a little push up there. And then the distribution ends. They've sold all their product, which they got at retail at wholesale price. And you know that because the volume's now died off. Look at the volume, died right down. And then you see this last push up, which is this last push up. And then you get all the suckers, all the retail traders thinking, I want in on this action. Look at it, it's pushing up now, it's going to break out. And so they get rid of their last bit of their product at the highest possible price they could sell it for. And then they bring it back down to start it all again. So tomorrow we'll probably see an area distribution accumulation again. And you see volume spikes coming into these areas, before they push it back up to sell it again. And that's the cycle. That is the cycle of that. And in live traders, they have their phase. What's the phases? Phase 1, 2, 3, 4, isn't it?
4, yeah.
Yeah. So you got phase 1, 2, 3, and 4 back down. I'll draw that in red. So you've got phase 1, accumulation, phase 2, phase 3, phase 4. But I never really understood it until I read this book, because I only understood it as pushing up. It's not until I read this book where Anna Coulling describes it as, like I said, about wholesale pricing, supermarkets trying to stock up at the lowest possible prices down here, which makes perfect sense, doesn't it? Why would they not? They want to sell it, buy low, sell high. And that's exactly what we're seeing. It's exactly the same. You can go into any business around the world and they're going to buy at these low prices, sell at these high prices, buy at the low prices, and repeat. And the retail traders, which is no longer us because we're now the pros, we're the guys who are buying and accumulating our shares down here and selling them to the suckers at the top of here. That's what we're doing now. We're not going to be retail traders anymore. We are pro traders. We're the smart money now. So, and that's it. And that's that entire chapter we've just gone over. Sorry about that. I don't know how much time everyone's got. How's that sound?
That was great. Thank you so much. That really was good. I'm gonna sit down and really read this chapter.
Yeah,
now,
chapter 5 as
now
well.
that I have the notes.
Yeah, read chapter 5 as well, because
Okay.
that's what we just discussed, is distribution, accumulation. And there's a really important bit, a really good bit in there called testing the market. Definitely read that, because that's really good. And basically, that was probably one of the things that changed my trading the most, looking for the test, just to know whether. I'll sum up very quickly. They're looking for tests. The smart money are going to try to see whether they've ran out of buyers or sellers, so they need to do a test. It's a bit like you know, when you selling a new product and you do market research, you go out testing people. What do you think of this product? And if they like it, then you know to sell it. If they don't like it, you don't sell it, or you push the price up or down. So a test, a typical example of a test would be like a hammer candle, but not in the place you expect it to be. You know, you expect to see a hammer candle or one like there, but a test would be a candle. I wonder if we could see one. I don't always see them, and they're not always that obvious. But what you're looking for is low volume. Here we go. There. Let me zoom in. So this is where the low volume comes in. So if you see a low volume candle, the market. Let's bring my pen a bit smaller. So this low volume candle here, it's basically this hammer candle here. You've got two of them in a row, the little one and the bigger one. And if you look at the volume for that, you've got very low volume. So that is definitely a test. So what this is doing, the market makers are putting a test in there, driving the price down to see whether there's any more buyers pushing it back up again. And there's no buyers because that candle here is really low. So there's definitely no buyers left on the market. Oh, well, look, we're selling off. We just closed. We're about to close. Anyway, so that little hammer candle, I'm going to zoom in again. Where are we looking there? So that's better. So can you see these two candles here? And then on volume, on low volume, so below average volume. So the market's tried selling it off, and because there's no volume, no buyers coming in, they know that there's no one left to buy. So they're mopping up the last few orders, and these are buyers who are adamant they definitely don't want to sell. They didn't sell here, they held off. The buyers are thinking, yeah, we're pushing up again. Look, so they probably locked more people in because we broke the high. And then you get this big candle. And then we have this test again, and it's still slightly higher volume than the last test as well. So they know that the buyers are like declining now, and that's how you see why the market's pushed down. So that's a perfect example of a test, that is. And that's what I'm looking for as well, tests. So if I've gone short and I see a low volume test candle or candles, and I don't always think, crap, that looks like it's about to push up. I look at the volume, and if the volume's low or below average, I'm still not threatening at all. So I'll leave my stop loss up here. You know, that particular sample would have been a stop out, but unless you give it a bit more room. But the point is, it helps you not to get out of a trade and panic. And that's why I've been getting into so many trades, like in the pre-market, because the pre-market is a bit like this. I've seen quite a lot of times where the pre-market comes in, you put a test in, and don't forget the pre-market, the volume is probably about a tenth of the volume what you see now. Probably all the volume bars are probably no more than that, but it's still valid volume. And then so if you do read chapter 4, make sure you read 5 as well, because well, and then make sure you read chapters 1 to 12 because they're all great.
Oh, can I ask about that gray area that you said was neutral on the volume, on your volume?
Yeah.
What do you mean by neutral? Like,
Good
why
question.
is it
I'm just
different than the green and red? Because that's kind of neutral. I mean,
yeah. So the
what's the
green was
gray?
buying the green was buying above the ask. The red was selling below the bid, and the neutral was at the neutral price, the asking price. I think I need to go look at my code again because I can't quite remember.
Oh,
But it's something like that.
okay.
Hang on, that one there.
So
And
when I
bought
have volume, I just have one color. It would be helpful for me to see two colors. Do you think that's
you
in
should
my
have
system?
You mean you want to see like green and red, as in?
Yeah, I think mine is just plain volume.
Okay, you
Like,
should have a look because you definitely should be able to change the color based on the direction of the candle.
okay, I will. Because I used to, before even thinking of this, I used to just look at, I I, I guess I used to count. It was probably kind of silly, but I don't know, maybe it wasn't.
Yeah, no, it makes it really much easier. So
Yeah, I would count if it was more red in a day on the higher volume bars
oh yeah,
versus,
don't do that. Yeah, just you can
yeah,
make
that's what I used to do to kind of have my idea that, I just thought it was a good idea that way. Like,
yeah,
huh,
yeah. So basically, the green means there was more, the volume was more positive on that candle.
sure,
The red means it's less positive on that candle, and the
of
neutral
course.
was that it wasn't negative or positive. It's in the middle.
Okay,
So I generally
okay.
ignore the neutral. I'm only looking for if I'm getting a reversal and I think that we're going to see a sell-off, then like this candle here, it's got
Mm-hmm.
more red than green, and I can, and obviously it's obvious because it's a red candle as well. But you don't always get that. Sometimes you get
Sure.
you get a green candle, but it's more red just because
Mm-hmm.
a bit more volume came in at the end.
Mm-hmm.
Like this red candle here, that's almost 50-50. Most of it's only a 5-minute candle, 2-minute candle, so it's almost 50-50. But this one here, you can see that candle was all green and it's mainly green as well. So it kind of makes sense. It's
Mm-hmm.
just helping to help detect anomalies as well. And you can usually it's when you see a battle between the buyers and sellers, you can see, oh, there's slightly more sellers there. So maybe the next candle will be a down candle.
Mm-hmm.
Like this candle here, that's more sellers, and it went down. That candle there's more. Here we go. That's got more sellers, but the next candle was a neutral candle. It didn't. It went sideways.
Mm-hmm.
So it's not really something I pay too much attention to, but it's something. It's something better than not having anything there or the same color candle.
Of course. And on the volume profile that you have on the side,
Oh, I love that. It's great. Yeah.
okay, how am I supposed how do you read that?
So I've got it set so that it only looks at only looks at the 70%. It ignores this bit here and it ignores the bit at the bottom. It looks for the highest volume of the entire range, and then out of that range, then it puts this orange line in, which is called a point of control. And this point of control shows me where all the heaviest volume is on that in this particular chart.
Oh,
It changes. So if I move it, if I do that, the point of control will change elsewhere.
oh, sure, okay.
And like
Oh,
that. You see, so now it's telling me that the heaviest volume on the chart right now is along this area, which will probably make
mm-hmm.
sense because, and it's probably from this volume here, because you've got it's during market hours here as well, so there's more volume there, and this is post market or pre-market, and there's not much volume there at all. But then you've got the end of day volume. Look at that from the end of yesterday. And you've got this big volume concentration there as well. So you could probably just look at that and say that is, if you didn't have that volume control, you could probably just what do you call it? Eye it and say,
Draw a trend line
yeah,
there.
and
Yeah.
so that's where the most volume is going to be. It is common sense.
Gotcha.
It's all common sense. Everything is.
Sure. It just kind of points it out to you a little
Yeah,
bit.
I don't need a write. It's always there, and I know that.
Mhm.
I know now. I found a new indicator today. Look at this indicator, and I didn't know even anything about it. It's a brand new one called Anchored Volume Profile. So if I wanted, so this tells me the volume for the entire chart. But if I wanted to see the volume, say from this point here, look at that.
Mhm.
It draws it in.
Oh.
It's only telling me the volume from there to the end of the day.
Oh.
So if I do the volume, say I want to do it from, let's zoom out. So say I'm looking at this chart here, and I want to see the chart, but I only want to see volume from here. So it's telling me the most volume from there is at that point there.
Okay.
Which is similar. To be fair, the other volume was telling me that as well. But sometimes if you get lots of volume up here, you can find another area lower volume in a smaller section of the chart, which I quite like. I don't use that much, but it's only been out a week. I think that indicator. But I always use this indicator because I use this as a natural area of support and resistance. So So for example, this morning when I took my trade, I got in there, exactly there, and at the time this morning, this volume was up here as well, so it's a bit higher. So we must have had extra volume here. Yeah, it makes sense because look at all this extra volume, so that will move the volume to that area instead of up here. But during the pre-market, this side of the screen didn't exist. During the pre-market, all I saw was. So that's what it looked like to me in the pre-market, and see the volume changed.
Yeah.
So that's all I could see. So in fact, the volume was close to the VWAP, if I remember rightly. So if I move it there, I think that's what I was watching down there. It was definitely up here somewhere. Yeah, it's about there anyway. But so it only shows you the volume, and like this is the pre-market volume. It looks quite a lot, but it's about a tenth of what you get during the normal market hours. But it's still equally valid. Look at this. Remember I said about it's an art, not a science. You can see quite clearly this volume is declining. And while that volume is declining, the price, the spread is going higher. And so to me, that showed me that there was weakness, even though that's a nice big push up. But overall there was weakness. And when I saw this increased volume, which was at that candle there, my lips were wet at this point. I was like licking my lips, thinking like, that's it, I found it. And I got in there. So originally I saw it break above the average volume, and I think I got in originally, might have been here. That's my original entry. And then I was in the green quite a lot. It was doing okay. And then I saw it come back up. But again, I wasn't worried because I was watching the volume. The volume was declining. So I knew if it was going to push up, it was never going to push up any further than maybe the bottom of the post market last night. So I wasn't worried at all. So I still didn't have my stop loss in because I was watching it. And then I got in on that down candle, and it came into where I probably thought it would go anyway, off of that bottom. So that was my short I was in until the low of today.
Okay.
But to be fair, the volume afterwards didn't inspire me because it was declining volume, so I wasn't too impressed with it. But if I go further, and again, this is using 100% volume analysis. I only looked at volume today. That's it. I didn't use, and obviously the trend helped as well. So that's when I got more interested, because then it was coming down, and I'll be honest with you, I was seeing. You could say it's increasing volume. Yeah, if you look at the white line, it's more. It was going up, but then it started coming down again, and that's when it was getting close to 8 o'clock. But I did add actually around here as well. I think I added about there. So and then all the volume came in at 8:30. Look at that volume.
Yeah.
And it's hard to judge when that type of volume comes in, but it was. Let's go back in. So we were pulling up in price, but the volume was coming down.
Mhm.
Again, I wasn't worried. And this is exactly what we talked about in the book. Decrease in volume, increase in price. I should have probably added again, but I didn't because
Yeah.
it was pre-market, and I didn't. I think I had 4 contracts at that point. I didn't want any more than 4.
Mhm.
And then
Yeah, that's where I thought you got in when we first spoke. Yes. I
and
see.
then just clear that, and then it pulled right down, and there was a bit of increased volume. You can't really see it now because I'm on the normal day volume, but the volume increased there as we were declining in price there. So I knew straight away it was going to be a good trade. And I sound big. I'm not trying to be big-headed, but you just know.
Mhm.
And then obviously then I can't, the volume in the opening I ignored, and then once the opening that, do you remember I said to you I got out of my trade because I saw the volume
Yes.
like come in and I panicked thinking crap that's
Mhm.
because I looked like I thought, oh, that's ending volume, and I crapped myself, thought, oh, I'm out, I've got out, panic sold, and then I realized it's 9:30. I thought then the market is opening.
You should.
So,
Yeah.
and that's using ending volume as an exit, which technically it was a good exit anyway because I got out about there.
Of course.
So, but still, I shouldn't have sold. I should have waited because it was just the opening market volume, and I probably would have sweated it a bit had it got up to here anyway, because that's a lot of gain to lose on my runners.
Mhm.
But it was still a good out. So yeah,
Definitely.
so that's it. Anybody else got anything else they want to add? Any questions? Look at the end of market. Oh, Amazon. Look at this Amazon earnings. Wow, look at that.
Whoa.
Well, to be fair, it's only 128 to 138, so it's gone up $10. And is it Apple tonight? Apple. I bet they used the word AI in their report. But who knows? I don't think they may not have even done the earnings yet. It may they may not, maybe just pre-market, post-market buying and selling. Yeah,
Thank you so much, Paul. Thank you.
no worries. Hopefully oh yeah, just saw Glenn just put on there Apple and Amazon are ripping. Yeah. Yeah, no worries, you're welcome. Everyone good?
Yeah.
Anybody
Thanks,
have any
Paul.
questions or any better ideas of how we can make this better, the book club? Bear in mind, I didn't really know what I was doing. It's kind of just made up as we went along.
Perfect for especially the first time.
Yeah, I
Fair
would
enough.
agree.
Thank you. Okay, so if everyone's happy, I'm going to call it a night. Actually,
Yeah.
finish
Thank you.
at 9 p.m. tonight or 9:15 p.m.
Yay.
Yeah. Okay, well, have a cracking evening, and I will speak to everyone tomorrow.
All right,
Cheers.
take it
Thank
easy.
you.
Thanks, Paul. Thanks,
Thank you.
everyone.
Cheers.
Thank
Take
you,
care.
everyone.
Okay. Bye-bye.
Bye.